Silvergate, the crypto-focused bank, is suspending dividend payments for its preferred stock, setting the stock down about 20% as of showtime to around $9 per share. Silvergate is important because a lot of people in the industry use it for banking. A lot of high-profile lending agencies, a lot of crypto startups use Silvergate. There hasn't been a lot of US-based banks that are regulated by the federal government who have wanted to jump into crypto. And so when there are a few that get issues or have issues, it's pretty notable. Zach, start the story, throwing it over to you. Not a great way to end the week, but also not shocking because Silvergate has had a lot of problems over the last 3 months with the drawdown of FTX.
Yeah, a lot of doubts around the health of Silvergate, obviously kind of getting hammered in the markets, not just today, but I guess over the last few weeks. So yeah, more bad news for Silvergate. I think there's a lot of scrutiny ramping up around banking relationships in crypto. I think there was a little item, I don't know where I read it, but about a crypto firm sort of being denied access to the banking system because I think the scrutiny and the questions being asked on the regulatory side in the wake of FTX are certainly escalating. So this, unfortunately, kind of fits, I think, into that narrative where ultimately crypto firms may have a hard time finding the banking companies, the banking partners that they've really ended up relying on these last few years. So that, I think, is probably the big picture. But as it relates to Silvergate itself, I think there's questions like, is Signature going to run into these issues? They are also another prominent bank that serves the crypto industry. So yeah, a lot of questions swirling, but certainly a lot to go in on. Adam, I'll toss it to you.
Yeah, I don't necessarily think that this is bad news. I think that this is more a reflection of reality kind of moment. The reality of it is that Silvergate made a lot of money off of kind of its crypto exposure and off of the servicing that it was doing, and then it lost more money than it had ever made off of crypto over the lifetime of its engagements and losses that were disclosed at the end of the last quarter. So, I mean, that's the reality. In that type of situation, what a dividend is it's like, hey, we're doing so well that we actually don't even need this money, and we'll just pay it to you because you own equity in the company. The company's not in a position to be doing that anymore, certainly not right now. And so, again, it's a prudent move, even if it is something that won't exactly make Wall Street thrilled. The counterpart also on this is that it's not like anybody else is doing any better, whether in kind of the traditional exchange world, or the crypto world. Times are tough, right? The Federal Reserve has turned off the liquidity tap. That's rough for risk markets in the modern era. And so it's not surprising to see this. And also, if it were happening in a different environment, then maybe it would be worse. But I really think this is, again, just a reflection of reality story more than anything else. Jen?
Yeah, I wasn't surprised when I read this morning as well. And I've said this on the show before. I think that so many firms that operate in this industry or even adjacent to this industry weren't prepared for this bear cycle, and they certainly weren't prepared for two massive implosions. And so when I read this, it makes sense for Silvergate, right? They need to do what's best for their business. They need to remain as liquid as possible. And so, Adam, I completely agree with you. And Zach, to your point, I think I've said this before on the show as well. It just feels like deja vu to me. There was a time in the industry where no crypto firms could get bank accounts. It was super hard to do banking. Solutions were brought up to those challenges, and now it feels like we're just going back in circles again. And I wonder if all of these people who are building in Biddle season with all of this VC money that's still flowing through the industry are going to have a hard time finding bank accounts and interacting with the traditional financial ecosystem because of all of this drama we're seeing. But Will, I'll pass it back to you.
Yeah, just a few more numbers, which I think gives some more context for the story. The stock for Silvergate was actually drawn down 90% last year, and then the drawdown today, of course, was about 20% so far. So that's a pretty brutal beating in the public markets. And just like you guys said, Silvergate is one, Signature is the other. There might be a few others that do some boutique services for crypto, but really just those are the two largest players that are servicing on behalf of crypto players out there. Silvergate said that they actually lost about $1 billion last quarter, and that was mainly because of the contagion from FTX. FTX was a large banking partner with them, and we still have to find out what that's going to be like for Silvergate, right? That they're caught up in that whole process with the FTX creditors, a Chapter 11 bankruptcy. Maybe they get some funds back. Maybe some funds are on Silvergate right now. We still have a lot of questions around this. But public markets, they don't like that uncertainty, and they really don't like uncertainty when it comes to a bank. No one likes that uncertainty when it comes to a banking institution. So I think that's why you're going to see some pummeling in their stock price.